Hi, Ron. It's Stuart. It's Friday. It's the 14th. Happy Valentine's Day to everybody. Spread the love. Lots and lots of love to you all out there. Hope you're all well. Hope you've had a good week. Hope your trading week's been better than mine. My end of day trades I'm very much in the red at the moment. 200 pips down for the day, or points down for the day at the moment. But day isn't over yet, so let's see how we go. But yeah, as I say all the time, that is trading. My intraday stuff's been going much better on the DAX and the Dow. But I've post up in our Discord group our end of day position. So retail sales coming up in about 15 minutes or so, but let's have a quick wrap of where the markets are. I'm going to start today with B for Bitcoin. We are still going sideways. We remain very, very well supported at this 92,000 level here, and for the last 10 or 12 days we just can't decide what we're going to do we? Here we are at 96,600 at the moment, and we're just sliding sideways. So patience, my friends. There was a technical weakness here this week. We had the 20-period daily moving average crossing from above to below the 50-day moving average. 50-day moving average is very horizontal. Oops, let me just change the setup so you can see the chart better than seeing my big head. There we are. So as you can see here, the blue line here, the 50-day moving average, very, very flat, running horizontal through about 98,500, 98,600, that sort of range. And remember, with moving averages, the bigger the number, the more significant the energy that's needed to break it. So the thickness of the wall, if you think so, 50 is thicker than 20, 20 is thicker than 10, blah blah, and 5 is thicker than 3, and so we go on. But as you can see here, the trend remains down. We've been under a 20-day moving average since the first of the month, but we don't want to go any lower. We're stuck sideways, 96,500. So clear resistance here, clear support here. What's going to happen? Well, nothing at the moment for a trend follower. It's still technically short, but we've run out of steam going sideways. Anything else telling us anything? Well, look at the RSI under the 50-day, very sideways action at 45. The MACD here descending from this the end of January. Trigger was under the 20-day here on the 1st of February, and then it's been lower. But there is signs of potential turn up here in the histogram. So we'd like to see this cross back over the 20, then over the 50, and then we have another go at the magic 100,000. But at the moment, sideways action for Bitcoin. Intraday, a bit more dynamism, as you can see here, up and down. So let me just bring in the calendar. Actually, let me just open the calendar. I should have opened this beforehand, shouldn't I? And see the data this week, and we'll talk about next week as well in a little while. So if we just filter this to just the main events. Select all. Okay, we apply that to the day. So it's been an interesting week. I'm sure you're all aware. I hope you can see that. It's not very large, is it? It's the calendar. So Friday, here we are, Valentine's Day. Not a lot of data this morning. GDP out of Europe, the final reading was better than expected. Remember, we had a better than expected GDP number from the UK yesterday. PPI in Switzerland was hotter than expected. Inflation in India was hotter than expected as well. So not a great deal of economic data. Obviously, the big news yesterday was Trump announcing these reciprocal tariffs, and then sort of backed off virtually immediately. It was all a bit confusing, but any trading partner that tariffs any imported US good will be getting reciprocal tariffs on imported goods into the United States. So it's across the board. He announced it before he met Modi, the Prime Minister Modi from India, yesterday. India, countries like India, Brazil, Argentina, the growing developing markets are the ones that are probably going to be hit the most on these tariffs. There was nothing about if it's just trade, trading goods and services. If it's things like value added, that'll have a bigger impact on the EU. But all US trading partners are talking about reciprocal retaliatory tariffs. So how much this will benefit the United States in the long run is very questionable, I would argue, economically. It's more obviously statement of doing what he said he was going to do in his election broadcasting. It's more to do with positioning and Trump, the great negotiator. Or I like to think he's the great negotiator. Remember, he started with $400 million off his dad, so he came from a very high board, didn't he? But anyway. So obviously anything could be announced over the weekend as well. So lots of risk being taken off the table, I would guess, as we come into the Friday afternoon America session as well. Obviously, the other big news is the political and the geopolitical news. The phone calls with Putin and Zelensky in that order, interestingly. Incredible stuff. And chatter that next week there will be a high-level meeting in Saudi Arabia with all 4 countries there. So Saudi, the US, the Russians, and the Ukrainians as well. Europe getting a bit sidelined, or the Europeans getting a bit sidelined on that. NATO getting sidelined on that. So he loves to talk, as you see in his press conferences. Talks blithers on more than I do. So see what the president pulls out of the hat next week as well. So obviously watch that. It's added to volatility. That's what we like as traders, as well as obviously the economic data. We'll come on to what's happening next week in a little while, but let's just have a look at what we're expecting today. So retail sales, I expect to slip a wee bit in January, 0.3 of 1% from 0.4 in December. This is the key core number. The headline number is expected to turn negative from positive 0.4%. So we could see some movement on this if we see some disparate numbers away from what we were expecting. So we've still got 5 minutes, so let's have a quick run through the other markets. So Bitcoin continues to go sideways, non-trending as far as I'm concerned. As far as the majors are concerned, whoops, not the pros, the majors. Dollar, sterling recovering quite nicely. Another strong day yesterday, big positive day yesterday on the 13th, following through today right into 126. So we've breached the 20 day moving average here on Tuesday, balanced day on Wednesday, strong day Thursday, through the 50-day moving average, adding to positions there, no doubt, as this recovery from this low down here at 122 or below 122 we went, didn't we, towards the end of January, and we've broken significantly that resistance once, twice, third time through it. Nice strong candle. We were long a lot of the pound crosses yesterday, weren't we? I think we're pound Kiwi. What else were we long? We were pound Swiss, which hit first target and then retraced. Pound Swiss again. Pound Aussie and pound CAD last night. We'll go through all these open trades later. So sterling, best performer of the major currencies today, and you can see it. This week, and again today we're positive and we're running to the key 126, having breached the super psychological yesterday at 128. So sterling remains bid against the dollar. Aussie dollar, we were long this from the other day, weren't we, as well? I can't remember when we took that trade, but again, there we are. It's here from, actually, it's longer than that ago, wasn't it? It was a 5th. So we were out of the money for a couple of days. We were out, well, more than a couple of days. So 3 or 4 days out of the money. Our stop loss was down here somewhere initially, wasn't it? We've ran it up to the T1. Again, I think that's fully closed. I think, or was it? No, it was just T1. We still got half of that position open. So again, Aussie come back and through these key round numbers. So we've breached this 63.33, a key level from last year, and we're still a bit of a leg to get to 64, but that can't be ruled out next week if we continue to hold the bid. Strong positive cross of the 20-day, crossing up above and turning high. You see how the 20's turned high, the red line here, above the 50-day, and all nicely aligned. Remember, we talked about alignment all the time when we're looking at moving average. So we got the 5, the 9, the 21, all nicely aligned. The 20's providing more or less support from our entry here on the 5th at whatever it was, 62.86. So we've taken money off the table at 63.20, and we're still got half the position on as we move higher. CAD is back. Dollar CAD is back down under 142 or at 141. 67 this morning. Still 5 minutes to the so I'll see. There we go. So again, we've had a weaker dollar this week. Another one that's been short from the 4th of February, and then the significant break was here the 7th when we went under the 50-day moving average and closed, the candle closed completely below the 50-day moving average. Bit of a retrace on the 10th, but then we on Monday, but we've been down all week, and then another weak day for dollar yesterday against the Canadian dollar as the oil markets perked up as well. Dollar Swiss, we were got stopped out on this one, didn't we? I think I can't remember. Anyway, check the Discord group. I think we were long and then got stopped out. I think I can't remember. This is from these lines here are before, but anyway, it was looking relatively positive for the dollar this week, and then we turned around. That's we were along from here, I think, weren't we, somewhere? But here again, you know, a significant turnaround against the Swiss franc yesterday. So you can see this trend. Excuse me. Freezing here. It's bright blue sky here today, thank God. It's been miserable and grey and damp for what seems like forever, but the blue sky's out and completely changes your personality. It does with me anyway. So as you can see here, the key thing I wanted to bring your attention for the Swiss franc here is the 50-day moving average breach for the first time since October. So it's a significant day, a very, very significant day, down day yesterday for dollar Swiss, and a positive day for the Swiss. So if we break this support here where we are now, this key neckline area, see how this is resistance as we were going up here, support, and if we break this, so 1, 2, are we going to break it for the third time? So this 90.90 level, absolutely key for this to hold up. If not, there's a lot of fresh air, a lot of white space here. This is where we make our money, my friends, isn't it? It's not over here. It's not what's happened. It's what's going to happen next is where we make our money. But we use our technical analysis to help us to predict where or anticipate where we might be going to. As you can see here, we have a nice long run. We've flattened out here, lots of volatility mid-January to mid-February, and the break is down. Is this going to sustain? We shall see. Last time we broke under the 50-day moving average significantly, we bought back, but then second attempt we moved down, leg retrace, and then all the way down here to under 0.84. So watch this space on this one. Significant break yesterday for the Swissy. Dollar yen under 153 at 152.75, coming back yesterday, the dollar, interestingly, and then we reversed again today. So we had a strong day for the Japanese stock markets earlier in the week, and yesterday yen came back into weakened again yesterday, and we're down. Yen improved yesterday. Dollar yen came down here, as you can see here, as we breached the key 154 level back into this 155, 154 channel, and then we've turned around again. So the trend continues to remain to the downside, as we'd identified up here when we put our little fib level on here, and we didn't bounce. We've broken lower to the downside. So this trend line here remains very much set. We looked like we were breaking higher on Wednesday. We reversed immediately yesterday on Thursday, rejecting the 20-day moving average and the key 154. So we're going lower, 152, and the last week's low at 150. Under 151 is next in line, and this continues to move down. MACD, interestingly, this looks like we may be getting a bit of a support if we get this 152 holds. We may be turning up, but too early to count that one. The trend remains to the downside and resistance at 154, which we couldn't hold on Wednesday and rejected it significantly yesterday, Thursday. So it's obviously all to do with the positioning coming out of Washington on the dollar and the trade relationships between Japan and the United States as well. Remember, Japan was expecting or potentially hoping to be avoiding steel and aluminum. I've got me saying it now, aluminium tariffs, but that isn't the case. So let's have a quick look at the calendar, where I think the date is just breaking. It's 1:30. Let's just update my calendar for today. So it's not going to do that. It's going to go back to default. So I'm going to have to scroll all the way through. So retail sales, there's a fall of 0.9 of 1% on a month-on-month basis compared to a decline of 0.2 of 1%. So it's worse than expected. That's Let me show you the, there we are, Friday, there we are. So the headlines here, 0.9 of 1%, a negative 0.9 of 1% compared to 0.2, a negative 0.21%. But previous month, the significant increase from 0.4 to 0.7. So that's quite positive for the consumer for the December numbers. Obviously, we've got the seasonality of Christmas spending and what have you. But retail sales ex auto has fallen 4% here, or negative 4% compared to an expectation of a rise of 0.3%, but again, December was more or less double to 0.7 of 1% from 0.4 of 1%. So there might be some key revisions on these, but this is a negative slant for retail sales for the month of January. Again, there we go. Retail sales taken out gasoline and autos, the cars. So second-hand cars still accounting for quite significant cut of that's negative 0.5 compared to 0.5. So it's a whole 1% swing for that key gasoline and cars, new cars. Doesn't actually give me, I haven't got the number there for some reason. Oh, it's Canadian number, isn't it? Sorry, I'm looking at the wrong number there. It's Canadian numbers. So that's a relatively, well, very mixed. We got a strong revision for December for retail sales, very strong revision for December across the board there. You see import and export prices ticking up as well. That's adding to the inflation take on that. So that would probably benefit stocks and perhaps weigh on the dollar a wee bit more on that retail sales number. So let's have a look how the yen, as that's the chart we got open. Let's have a quick 5-minute chart. And there we go. As we thought, a weaker dollar on that retail sales for minus 0.1. That's nearly a whole 1% down. If we just go back to that, the core number here, this headline, sorry, not the core, 0.9 from a revision of 0.7. So it's a near 2% variation swing from month to month. So we'd expect next month this to be revised higher. Potentially, although people might have front loaded their spending in December and then cut back really aggressively in January as inflation is still chopping around and biting away, especially in the services side of things. Key will be the PPE number at the end of the month, still a couple of weeks away. Remember, CPI was hotter than expected. PPI yesterday was hotter than expected. That feeds into CPI, so it's still kicking around. So the likelihood of the Fed moving at all this year to cut rates is very much in the question now. I say still expectations are still about about 0.3 of 1% rate cut, so that equates to a only one rate cut, but we'll see. But certainly the next two meetings there's nothing happening, and obviously by then also the impact of these tariffs or non-tariffs or whatever's happening will start to come closer into focus. Situation in Israel, Gaza will be another 3 months further on. Has the ceasefire held? Are we onto the next level? And obviously the key thing as far as Europe's concerned is obviously the Russian invasion in Ukraine and how much sway Putin is actually going to get with Trump. Incredible announcements this week. So retail sales much weaker than expected. Dollar under pressure. Dollar yen into this 152 area. Euro having a go at 105. Look at that gap on the 5 minutes. So a big gap on the 5-minute chart. You don't often see that on forex pairs. Euro gapping, having a go at 105. If you 104.97.4 has been the high on that data. So a weaker dollar all round. You see here we've jumped higher, but again, if you're trading this system, canny of the obviously impending news, it could have gone the other way and you could have been caught out. But this crossing moving average strategy has been long from 104.68, and we're currently trading at 104.90. So nice 20 odd pips in the bag ahead of the news, and obviously you've been short here. So we are moving higher. MACD, very strong. We moved into overbought area here on the RSI. So immediate spike, perhaps some short positions there, but that was our previous high of the day, which is where we're coming back to at the moment. So we'll see how much of that is given up in the sort of the next 10 minutes or so before we wrap up today. So where we finish. So 104. 104.97 looks like our high for the day and for the week. If we look at the just quickly jump to the daily candles, you can see there's our still positive day. Will we breach 105 later on? Well, that's the main data. We've obviously got announcements potentially from Trump when he wakes up, and obviously got the CFTC data as well later on, and anything else that's coming out of Washington. Obviously, the security meeting that's going on in Munich at the moment as well, in Europe, and Hesketh, the defense secretary, is a bit spiky as well. So a weaker dollar. We've had a look at yen, we've had a look at euro, sterling. Has it breached yet? But as you might have expected, sterling's back at that 126 area. Again, on an intraday basis, we'll see how that runs, but certainly some shorts, I would imagine, at 126 or closing of long positions. But again, here for the 5-minute trader, he's been long from 1250. It's the last trigger higher. There we through there, and the day high was before, actually quite well before the data came out there. That was today's high. So dollar at day lows, Friday lows on the week retail sales numbers. But bear in mind that revision for December was quite significant, my friends, as well. So once the analysts have crunched it and spoke to their clients, there may be some pullback on that. But the immediate reaction to the headline retail sales number, this negative 0.9 of 1%, is what's caught most people off guard. That's quite a significant variance from expectations. And the core number, negative 0.4 of 1% from an expected, certainly an expected decline, but was expected to be relatively flat. Remember, this was 0.4 of 1% for last month. That's been revised higher, and so it was expected to not change very much, and it's a big swing, and that's what spooked the market, and that's what spooked the dollar. So dollar weaker, and markets ticking up, indexes. Let's have a quick look at let's start from the bottom up. The Dow, this is 5 minutes again. Well, not as perhaps a bigger spike as you might expect here on pre-market levels. It's still an hour before the market opens. So stocks ticked up a tad. That's S&P 500. Interestingly, open, it's giving it all back basically. So that it's the stocks have sort of shrugged that off. The weaker retail sales numbers, and perhaps the dollar might come back, but we'll see what happens. So the first indication was a higher move to 61.15, and we're back at 61.11. But we had a good day yesterday. We were up a whole 1%. The Nasdaq was up 1.5%, and the Dow finished yesterday. It was also positive. It was across the board. Yeah, the Dow was up 0.77 of 1%. 340, the Dow added, the S&P added 63, and the Nasdaq, the wider Nasdaq, added 1.5% yesterday. Nasdaq 100. Yeah, interesting. That's much more positive Nasdaq 100 compared to the other two, wasn't it? So strong positive on the retail sales miss, and we're starting to move higher into 22,020. Looks like the I've got it's just an internet feed, but it from Reuters here, and it looks like the Munich Security Conference has come to an end, and Mr. Vance, JD, Vice President, is speaking. He's very verbose earlier in the week, and he's probably repeating that mantra now. I can't see what he's saying. Improve people's lives. We want to say what we know. So yeah, it looks like more meetings next week, hosted by Saudi, Russia, Ukraine, the Americans, and the Russians around the table in Riyadh. I wonder if oil will be on the market. Surprise, surprise. You've got Russia, US, and the Saudis all around the table. We'll see. So Japanese yen is actually down. We were doing quite well on this yesterday. This was a long position from the other day on the yen, and it looked pretty good yesterday. Now we've given it all back up today, so we're back under our entry. So the 100 or 300 odd pips points we were up has come back against it. It's only half position because it's lots of points on the board, but we'll see where that finishes. I was a bit disappointed. I thought that might have ran a bit higher tonight. So the yen, the strength of the yen is pulling the Japanese Nikkei down. Remember, this market is closed now. They're to their weekend, so these are just future positions, derivative positions. In Europe, excuse me. Whilst we're on that, the DAX continues to rattle higher, all-time high again yesterday, consecutive all-time highs all week this week, and we're at 22,550. Elections next Sunday in Germany. We obviously had that incident yesterday, also in Munich, where the Afghan refugee ran into a crowd of people. So 22,550 for the German DAX. Many are seeing value in the European stocks compared to the highly valued US stocks. So it's strong old rally, and off we go. Been a great one as a trend follower, the DAX, and certainly even the FTSE as well. 8,750 was touched this week. Sorry, 8,850 was touched. We got within a smidge of it yesterday. We come down. We actually closed down yesterday, and we're down again today at the moment. But again, FTSE also rallying. FTSE weighed by the stronger sterling yesterday, and today. So yeah, stock markets continue to hold at highs, basically. Yeah, I mean, as the world's most important one continues to consolidate above this 6,000 level. And you say yesterday we had a strong move. We actually breached the key 6,100 level, 6,115. We finished with a big 1% rally yesterday. So new all-time highs, intraday all-time highs posted earlier on today. So we see how the markets open on the back of what JDV might have to say in Munchen. So I say stocks bid. Gold and oil also very much in play. 2,925 this morning for gold. We got a new all-time high this week. I'm sure you're all aware. On Tuesday, dipped Wednesday. We recovered again yesterday, Thursday, and we've had another go at the all-time high this morning. So that bid remains. We're rolled over today though on the short time frame. But still remaining bid. We've been under the 20 yesterday lunchtime. Then we ran away. We're down again now following the retail sales figures, or some money being taken off the table by the Europeans. Where are we now? We're nearly 2 o'clock lunchtime through Europe. Now it's 3 o'clock in Europe. It's 4 o'clock in Eastern Europe. And money being taken off the till for the weekend, I would guess. Who knows what may come in the weekend, but certainly it remains bid, and try short in gold at your peril at the moment. Lots of short positions squeezed out as we've ramped higher and rallied higher. But again, the art of trend following is absolutely clearly for all there to see. It's been a massive start for 2025 for gold. Where will it end? Doesn't matter in a sense, does it? You just stay on your surfboard till you get dumped off. And at the moment, this 9-period moving average is where our stop loss would be, and we're continuing to ramp up, and we've remained above the 5-period either, fast moving. So it's a very well bid market. When it does turn, it'll turn quite aggressively, because that's what gold does. But at the moment, lots and lots of pips, lots and lots of points in the bag, and obviously 3,000 is just a stretch away now, or not much of a stretch away. Here we are, just up here. Will we get there? It seems inevitable. Probably won't get there when people start saying things like that. So just watch out. A bit like the first attack on 100,000 for Bitcoin. These big grand numbers always come into play. So 2,920 for gold at the moment, and remains bid. Again, careful trying to short the gold market. And oil has been very much in focus, not only this week, but for a long time. We're back to $72. The move down was sort of paused as we went to test $70 last week. We've rallied at the end of last week, beginning of this week. A big sell-off on Wednesday, tariff talk, and then we went back to produce a new oh, and actually we didn't. I thought I'd registered a new low for the year on yesterday. It wasn't. In fact, I was mistaken on that one, but I'll double check. But yeah, it still remains weak. And again, if this, I mean, there's no guarantee that these are going to cross, but they may bounce off one another if we get another leg up higher. But remember this, what we were looking at here towards the end of 2024, where we were looking for a breakout. We had these 3 consecutive parallel rallies, but we couldn't break out. And then the breakout came and off we went towards $80, but we've reversed all of that. And we're back to the key $70 level at the moment, but we're trading at 72 at the moment. So see what happens next week when we've got Russia, Saudi, and the United States in the same room talking extensively about peace in Ukraine or whatever the Russians are going to get for their unannounced invasion, and obviously the impact on the oil market. Obviously, Trump wants cheaper oil prices to counter his inflationary tariff falls. So we'll see how it all pans out. But oil remains under pressure with big fat resistance there, where the 50 and the 20 are converging at 72.70. So 72.70 key resistance for US oil next week as we go forward. The trend remains very much to the downside. So there we go. That's Friday. That's the wrap. Dollars weaker following the retail sales market. Oil continues to be under pressure. Gold continues to move to the upside, and stocks are hanging on to their gains. So the mantra or the trends haven't changed particularly. I say we've had a bad week on our end of day trades. We've got, I can't remember, we've got quite a few open at the moment. Aussie, let's just run through them now. Aussie dollar, I think we looked at that before. Yeah, 10 minutes, I'll wrap this up at 2 o'clock. So let's start with the Aussie dollar. It's the majors. I think we looked at this before, didn't we? Yeah, sorry. So yeah, Aussie dollar's taken T1 out. So we've still got 50% of our position on. I'll update everyone, obviously, close of business tonight. I might take all of these off. Is how I'm thinking at the moment. We'll see what the trend looks like, but that looks fairly steady, doesn't it? So Aussie dollar, we're in the money, and that's up to the upside. Others were the crosses. So the others were the pound, GBP, AUD, was another position we had. I've got that crossed out. Oh, was that hit target? I can't remember. These lines are around. I think we were long. I think that's hit T1. Oh, okay, let's bring in the Discord. I can't remember. Just the Discord group. Where's my? Yeah, there we are. So hang on, let's go back for the week. I don't know if we've updated this much this week. So this was the 12th, 13th. So we've had a bad week. Let's just wrap this. Where did the week start? It was the 10th, wasn't it? 10th. These were our trades. Obviously, CAD was the what's the 10th, wasn't it? Monday was the 10th. Yeah, Monday the 10th. So Aussie CAD and oh, anyway, I've got them here. So Monday we had a 53 gain, and then we had a 72 loss. 72 losses here was the Kiwi. 50 gain was, I don't know what it's from, but we were down 18.8 points for Friday. And this was, it was this one, wasn't it? We forgot to update this last week before last. I'd forgotten about the pound CAD. From the 6th of February, that was a 24 and a bit gain. And then we had the second target. We took out. It retraced back to the extended stop loss, and I'd missed it. So 53.5. That was the gains. Oh, that was our trades for Monday, and we were negative 18.8 on Monday's close. Nothing on Tuesday. Wednesday. We had this Aussie CAD that we'd taken on Monday night that reversed to its stop loss, so we were out for 32.2. The Euro Swiss hit T1 at 17.4, but then later on in the week it's reversed back to its stop loss. I should have moved the stop loss up on that one, but we've ended up being negative for that Euro Swiss trade. So by close of Wednesday, we were minus 33.6. It's just the way things happen. Thursday night, 10, 12, Wednesday night, we had four trades trigger. We were long Euro, New Zealand, long sterling, Kiwi, long the Japanese yen, which looked pretty good yesterday. It stopped us out, not stopped us out, but it looks like we're going to end up losing on that. And then we had this counter contrarian position. We were short the Dow, which didn't work out. Thankfully, it was only half a position, but we still lost 100 odd points on that one, I think, didn't we, on when we closed that one out? So that's brought us down quite significantly for the week from a points basis. Yesterday, the 13th, we had 6 trades closed. 1, 2, 3 were positive, and 1, 2, 3 were negative. But I say that big Dow trade where we lost 167 points. So we are currently, or as of last night, we were minus 233.45 points for the week. We closed yesterday, as I say, negative 14.8. Oh no, that was the day before. That was Wednesday, 33.6. That was Wednesday. This was yesterday. Did I update that? I don't know if I did. Anyway, that was this was yesterday. These hit target Aussie pound, Aussie pound CAD. These are still open, as I say, along with these trades here. So there we are. We're minus 33, 233 for the week at the moment. We've had some successful trades overnight. Aussie hit its T1 and it's still long. So I've drafted as we saw on the chart, I've drafted the stop loss up to 0.6285, and the final 50% of Kiwi New Zealand actually reversed the stop loss, which was at T1. So that's another 20 points for that. So we're up 40 points today at the moment, but we're still net nearly 200 points, negative 200 points for the week. We'll see how we finish for the week there on those trades. Okay, so that's Friday basically. So let's have a quick look at next week. The key thing for next week being the Fed minutes on Wednesday. Let me just I get rid of all these companies. I'm not in Brazil. With all due respect to Brazil and France, I'm not Italy. Not really sure. These are market moving data. The only reason I'm clicking these off. So please don't take it personally if you're from India or South Africa. These are the ones that move markets. These countries, the ones in South Korea. All due respect to everyone. Let's just we're interested in all of that, but we're only interested in the high impact events. And we want to have a look at next week. So 16 to 22, apply, and we'll see. So we kick off the week early Sunday night as the markets are open with GDP data from Japan. It's Washington's birthday, so the US is actually closed. So again, the markets are closed on Monday in Canada and the United States for different reasons. So again, you would expect perhaps that you saw that with the gold positions being taken off the position there. But I say highlight of the week is really Wednesday and the Fed minutes at 7 o'clock GMT. I'll be live for that. Tuesday, relatively quiet data. We got jobs data. We got the RBA numbers, but expected to cut by 25 basis points. The RBA overnight, Monday, early Tuesday morning. Jobs numbers for the UK are we showing? Are the jobs and unemployment rate going to tick up a bit like the GDP and some of the construction data suggested? Key data for Germany. Remember, the Germans very much in recession, or technical or otherwise, depending on what you call it. You see, outlook is really moribund. Are we going to see any tick up in that ahead of the election next Sunday? Empire State also on Tuesday. Inflation from Canada also on Tuesday. As I say, Wednesday is really dominated by the FOMC minutes. We've also got overnight again. We got the RBNZ expected to remain unchanged actually, but they could surprise or may need to get aggressive as well at 4.25%, looking to potentially cut as well. So watch those. Inflation data out of the UK on Wednesday. Thursday sees obviously the weekly normal weekly claims and the inventories because of the bank holiday. It's been pushed back from Wednesday to Thursday. Philly Fed is also expected on Thursday. Obviously, Thursday is probably the day that's penciled in for this meeting in Saudi, but it may come earlier. Who knows? Lots under the bridge before then, obviously. And then Friday, retail sales from the UK and the PMI data kicks off for February. The most important being the ISM. Where's the ISM one? Oh, so it's S&P one. The ISM one isn't on there. But the most important one being the US data later on in the day. We'll be live for that as well on Friday. So join us next week for that. So another key week, third week of February next week, and then we wrap up the month the following week. And obviously then, as I say, the German elections on the 23rd. So key event for Europe, but obviously everything's being driven currently out of Washington. What Mr. Trump and his team have got to say, got to do, how much further we're going to go with the tariffs, how much further we're going to go with the job cuts in government employees or people wanting to move, how much further we're going to see an improvement or potential improvement in the situation in Gaza and the Ukraine-Russia war. Amazing stuff. So lots to get your teeth into next week. Let me just leave you with the gold market. See if the profits have continued to be taken on that. No, we're still holding at 29.20. So we've dipped. It's dipped on the data here, but sorry, it rallied on the data, but it's come back 10 minutes. It's fallen again on the data, so it may be something that Vance has said in Munich. Who knows with regard to the situation there? But certainly, if we go up the time frames, it's still a strong gold market. But there's that key break of the 20-hour moving average, which we talked about earlier in the day. So next support is at 29.15.50, where the 50-hour moving average sits. It looks like JD Vance has just stopped talking as well there. Okay, so take care, everyone. I will see you all next week. If there's any questions, let me just check our little question box. There's nothing going on here, so I'll wrap this up as the hour rolls over. Have a safe weekend, and I'll see you all on Monday. Be good, be safe, and spread the love. All right, it's Valentine's Day. Take care, everyone. Bye.